The European debt crisis dominates debate at the IMF meetings this year, but a serious meltdown would hurt the developing economies that are the World Bank's main constituency. Its President Robert Zoellick tells us that unless politicians act fast, emerging and developing countries, so far resilient, could suffer contagion and could even turn to protectionism to defend their markets. Bob Zoellick, President of the World Bank. Policymakers are gathered here today in an extremely tense situation. What's your outlook for the economy?
Well, I think we're in a very dangerous period. I think that coming into the summer, you had a multi-speed growth recovery. So the developed economies were slow, had high unemployment. The emerging markets, which we work with, had recovered quite well and provided about a half of global growth. But I think the events in August have lowered the prospects for the developed economy, lessened confidence, and we're starting to see that effect on emerging markets too.
And so what do you see as the impact on emerging markets and perhaps even more importantly developing countries, which are your core constituency?
What was striking is starting in August, we started to see sort of the average bond spreads increase by about 70 basis points, about 3/4 of a percentage point. A lot of the equity markets took a hit, just like they took in the US and Europe, and then sometimes double-digit hits. They had already, the developing countries, had the weakness because their exports to the developed world had not recovered fully and were kind of at a slow level. And the risk that we're now watching closely is if the downturn in confidence you've seen in developed markets moves to developing markets, then consumer confidence, business confidence, and investment in emerging markets would slow what has been the primary bright spot in the world economy.
So given that all the policymakers are here in Washington, presumably they should be looking at what's going on in Europe, they should be looking at the risks maybe of double dip. What should they use this week to do to prevent that scenario of contagion to the developing world?
Well, we've got a number of things. One is, I think it'll be important to have a good discussion with some of the Eurozone countries, the US, about what their plans are to try to deal not just with the liquidity questions that they've been dealing with, but also some of the fundamentals. So in Europe, the combination of sovereign debt, the banking system, and competitiveness. I think Europe has not yet reached that decision point, but I hope coming out of these meetings they get closer to recognizing they need to do it. Europeans have to make the decision for Europe. And so it's a fundamental, not just an economic question, it's a political question about whether they wish to create a fiscal union to match the monetary union. And there's different ways to do that. It's not just a simple question of Eurobonds, it's a question of creating the institutions, the markets, the overall responsibility. Or if that is not the European decision, then they're going to have to decide how to manage some of the Eurozone members that are over-indebted and uncompetitive. And so my main point is, that's not a decision that's a technical decision, but Europeans are going to have to make that decision. And so far, what they've been doing is buying time with the actions of the European Central Bank, the EFSF, and other steps, which are important. I don't mean to denigrate them, but they're not sufficient to deal with the core problem.
Do you think we could see a revival of protectionism that we saw a few years ago and obviously in the 30s?
Well, the 30s makes anybody blink because we certainly don't want to follow that path. So far, this has been managed, and in part, the World Bank, the WTO, has really done an active job of trying to monitor actions, even if permitted under the WTO rules. So in a way to kind of name and shame, or at least identify the risks. Some of the actions in the recent years have actually come down a little bit. Because some of the countries worried about inflation have actually lowered the barriers. But we're just starting to see the signs, for example, in the manufacturing sector. And if you get this downturn, I'm afraid you could see more signs of people raising barriers, either informal or formal. And that would make a dangerous situation even of greater risk.
Bob Zoellick, thank you very much indeed.
My pleasure.